Has the algo changed? We're looking at the S&P. They have been buying dips and setting highs. When will this change? But it won't show up on this big chart. Here it's clear, from the lower left to the upper right. Shorter time frames, maybe we can start seeing some downside? Let's delve into it. I'm going to start this video a little bit differently. I'm going to talk about algo. You've heard the term. It's short for algorithm. And the algo has been, the rules of engagement for the machines is to buy the dip so far. The question that we are trying to answer, have we changed it or are we in the process of changing it? This would mean a top of sorts. More on that point is looking back to what has happened so far. We have had 6 dips in 6 months or so. The heaviest one was in August. You can see it on my screen. And it was for about 3 days, very violent. It ended on 8.5. We never made a lower low. They bought the dip, the algo, and they made a higher high. It should be no mystery. We should expect the higher high unless we start seeing behavior that is slightly different than last time. Is this time different? So far, my message has been there are different elements. The main of which is that this time we dipped extremely badly on the 18th of December. And then we had a small bounce that didn't hold and we made a lower low. And that is the slight difference. Now again, we had a pretty bad Friday on the 27th. You can see how close we are to the all-time high. So this by no means is the time for the bears to come out and say, I'm shorting everything. If I'm short, and I am, on these large dips, I'm locking some profits and making my positions better, the ones that are in trouble. The best method to short is selling credit call spreads and the indices out in time so they don't get in trouble. Now to specifics, let's look at levels. The SPX is 1.7% above the low that they must hold from the 20th. So it's basically as close to a new breakout as it is to a pretty solid support from the 20th. The main components here have been twofold. One, we have the mega caps, the large companies that impact the S&P heavily, about 30%. And then on the other side, you have the banking sector, and it has been selling off. They look like they want to place a floor. That violent drop on the 18th, they did not make a lower low like the market. So maybe they base first. So focus on the XLF, the financials like JP Morgan and Berkshire. The Nasdaq is equally as strong because the leadership in there, top 10 companies are way more than half of the index. So if they decide to rally Apple and sisters, we will set another high very easily. On the other hand, if they decide that the mega caps need a rest, then there's nobody else to come help. There is no banking sector, no industrials to speak of, so they have to rely on the heavy tech. I have to warn you that there are some rhetoric starting to talk what we've been talking for months. I am very happy to see that we are ahead of the curve. Everything that I've been preaching to you in the past months is now starting to make the main media stream. I know this because you guys are sending them to me. All they need is about a 2% rally, 1.8%, and they will clear the highs from last week, and they will use that as a catalyst to just leapfrog above the all-time highs, which are right there. The surprise may come from this guy, the laggard, the RUT, the small caps. Look at them. They have completely priced out the election pop. So now they are inside of a base that has been well consolidated, which means that there's more at stake here, but it also means that it might be easiest for them to stabilize. Now, if these guys cannot hold the lows from last week, then they could accelerate to the downside and start a selling the rally algo. I want to keep this video short, so I'm going to leave you with this intangibles idea. This year, we have had all the tailwinds, and we may have lost one of the most important ones, which is the Fed. They somewhat seem to backtrack into a stance that I thought they needed to have this year. In other words, I thought it was a mistake for them to cut rates, and they may have been done with that. So watch the TLT. If this thing is falling, rates are rising, which means that the Powell not only cannot cut rates, he may be forced to raise rates for one reason or another. That would be freaky, but that's the mathematical explanation for this chart to continue on lower.